Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I have a trade idea for you today. December 26th, 2023, and I hope you all had a great holiday. Let's see what's going on with the market. The market is still in holiday mode. Even the S&Ps are up 14 handles, trading at or around their high of 48.20 for the day, just off of their intraday high made a few days ago, where I believe it was up at 48.30 or so. Even the S&P is just off of their highs. NASDAQ up 68, Russell up 12, and the Dow up 98. If you went through those or looking at the IV rank here, you'll notice that the Russell has the highest IV rank of any of the ETFs that we just talked about, even the S&Ps, NASDAQ, Russell, and the Dow. But I'm not going in there today. I'm going to go to a different phenomenon that I saw in the market. We talked about it a little bit on the show today. SPX, which has been on a monster tear and run. Yes, I know all about the Santa Claus rally, but I believe we've had that already. But regardless, let me show you of something that's going on in SPX. SPX right now has a typically has put skew, meaning that an option equal distance away from the current price, let's make the current price 47.70, an option equal distance away, let's go down by 100 points. Might seem like a lot, but on a $4,700 index, that's not a lot. Matter of fact, it's just about the expected move, or just outside the expected move over 51 days. So here's the expected move here on the right, 173 points. So you got 47.70, we'll go down to 46.70. You'll see that those puts are trading on the bid around $44. If you go from 47.70 up to 48.70, you'll see those calls are trading $53. Now, there's no dividend in SPX to worry about. There's cash settled index, meaning that there's no stock to be had. If you got, there's no exercise or assignment done here. Everything is cash settled. Typically, though, you would see puts because the velocity of the move is perceived to be to the downside, where people are willing to pay more for puts than they are for calls to protect a portfolio. SPX being the S&P 500, if you were trying to protect a portfolio of as a fund manager or even as a self-directed investor, as I am or you are, and you want to protect your downside, if you had long stock, you would go into something like SPX, which naturally makes those puts be worth more money. But right now, you've got all the enthusiasm to the upside. So I'm going to take advantage of this by looking to do a call broken wing butterfly. Now, the only thing I have to do here is decide where I'm going to go. You know, I like to trade closest to 45 days in the monthly options. Yes, you could go to these weekly options with 9 days to go. SPX is certainly liquid enough to do something like that. I'm going to stay in the 51-day range. I'm going to stay in the monthly options. Here's that $173 expected move. I'm going to look to go outside of that expected move and put on a broken wing butterfly. The only thing that you really have to look at here is how much risk do you want to take? Well, I like to go as wide as I can and still collect at least $1 or $2. So where am I going to go? I've done a little bit of the math. I'm going pretty far out. I'm going to go to the 50-15 call. I'm going to look to buy one of those. I'm going to go to the 50-40 call and look to sell two of those. So that's a 1 by 2. Now, I know I've talked to you about skew before. Naked options trade expensive. That's why we're looking to sell a second option here. Spreads trade cheap. So we're looking to buy a spread here. If I had the buying power, I wanted to use the buying power, this is an IRA account, it would be very, very expensive to do. So I'm going to look to buy some sort of wing to make this less expensive. Now, you can go out as far as you want to go with yours. I'm going to tell you what I did with mine. This is $25 wide, so I typically like to go at least $50 wide or wider. That's like risking two $50 wide to make one. But I'm going to go even tighter than that on this. So this is really going to be a play that I'm probably going to have to hold on to for about 3 weeks or so, especially if the market doesn't cooperate. I'm going to buy one of the 15 calls, sell 2 of the 50/40 calls, and I'm going to go out and buy 1 of the 50/100 calls. I was able to do this at $1.85 and $1.90. You'll notice that my buying power is $3,300 inside my risk parameters. On this show, we usually use anywhere between $2,500 and $6,000 in buying power. So for me, this would be a trade with buying power on the lower end per contract of my acceptable buying power. If $3,300 is too much for you, then it's too much for you to put on this trade. Maybe look to do it in SPY, where it would be $330, 1/10 the size. SPY is 1/10 the size of SPX. Of course, your credit is only going to be around 18 or 19 or 17 cents. Your credit's going to be 1/10 the size also. But all things being equal, it's exactly the same trade. SPY does have stock settled, where this is cash settled, makes it a little bit cleaner. There's not too much you have to do here. Everything expires to cash at expiration if you were to leave this trade on for its duration. It has an 84% pop. The theta decay per day is a little over $7. It has 2 short deltas because we're short a wider call spread against a longer, shorter, smaller $25 wide. $25 wide by $60 wide here. You'll notice that my break even is just over 50.60, 50.65 or so because of my $25 spread here. You add $25 to 50.40, you get to 50.65, and that's how you get your pop of around 84%. If you look here, the chances or the delta is right around 10. The chance of a touch is around 16%, and that's how you get that 84% chance of making at least a penny on this trade. Like I told you, I was able to do this at $1.85 and $1.90. You'll notice here that the markets are a little bit wide, $1.20 bid at 260, but there's plenty of liquidity in here. If I was able to get filled at this point, which you can certainly go down to the follow page and see, you'll notice here I did this trade when SPX was trading right here about $1 higher than where it is now. Obviously, if SPX goes higher, this spread will go higher. I got filled at $1.90. I told you $1.90, and I got filled at $1.85. It's rare to have SPX with call skew, so I'm trying to take advantage of that call skew with a broken wing call butterfly. You'll notice I've done a lot of these. This is actually the first one this year that I've done on the call side of SPX with my break even well above where the market is right now at 50.65 or so. That's my break even. What's my max profit on this trade? Well, listen, I could make $2,500 on this trade, meaning if we close right at 50.40, and this being a cash settled product, I wouldn't need any more money in my account to cover the stock because there is no stock. It's cash settled. Every option goes to parity wherever SPX closes 51 days from now in the AM. These are AM settled options. AM settled options. There are some options that settle in the afternoon. On the Tasty Trade platform here, you'll notice that these weeklies and these end of the months, they don't say AM next to them. They settle in the afternoon. All these W's settle in the afternoon. All of these are in the afternoon. And then you've got the morning options, which are the typical options that I like to trade. All right, everybody, that's my trade for you after the holidays. A little bit of short delta. You want the market to meander around or go a little bit lower. Remember, to the upside, you make your most profit, just like your most profit you can make on the upside if you move, transfer, or bring your account to Tasty Trade. Help us keep the lights on here. You've been very supportive of us in 2023. I hope you support us through the end of the year and into 2024 so we can keep all this great content free for you to enjoy no matter where you trade.